Well guys, the moment you've been waiting for is finally here. The government decided last week to raise the interest rate up 0.25%. Inflation has been rising like crazy ever since the pandemic started, and if you need any proof of that, just look at the gas prices or the prices of groceries or pretty much everything else. Prices of everything have just been getting higher and higher lately, in case you haven't noticed. In order to slow down this inflation, the government decided to raise interest rates, which makes it harder and more expensive to borrow money, which then slows down buyer demand, which then stops prices from increasing at such a fast rate. But of course, we're not here for all that. What we want to know is what exactly is going to happen to the real estate market. Is it now going to crash because interest rates have gone up? Prices have been increasing steadily over the past few years, so is the market going to actually correct itself and are prices going to drop? If you're looking for answers about what's going to happen next in the real estate market, you're in the right place. My name is Rob Bailey, realtor in the Chicagoland area with Arnie Realty Inc. And today I'm going to go over the current interest rate hike that just happened and take a look at how it could affect the current real estate market. Also, don't forget to hit that like and that subscribe button so you can be notified when I come out with more real estate content in the future. First off, why do we care that the government raised the interest rates in the first place? Well, as I mentioned before, the government raises the interest rates to make borrowing more expensive for the average buyer, and that includes mortgages or borrowing money for a home loan. Since the government has increased the interest rates, it's only a matter of time before mortgage rates start going up as well, which means buyers aren't going to be able to afford as much when it comes to homes as they have been in the past. Yeah, those times of those 3% interest rates are pretty much gone as of now. Right now, I'm seeing mortgage rates somewhere in the low 4s, and it's rumored that by the end of the year, they could reach 5% or maybe even higher. So what does that mean for the current real estate market and how it will affect the market going forward? Well, let's take a look at how it may affect home buyers and how it may affect home sellers. For buyers, it means that this crazy buyer demand that we've been dealing with since the pandemic is going to start slowing down. That means that if you're a buyer and you're going after a home, you might not run into that multiple offer situation quite as much as we have been dealing with in the recent past. During 2021, interest rates so low that pretty much anybody who could qualify for a mortgage would pick up one and try to look for a home. They might as well, since interest rates were so cheap, they wanted to see if they could take advantage of it, right? This in turn raised the buyer competition to those crazy levels that we've been seeing. So instead of you just looking for a home, you also had to compete with the couple who qualified for a mortgage who really don't need to move right now, but they want to see if they can take advantage of those interest rates. You also end up running into that home flipper who see how high the price of homes has been going lately because of these interest rates and all this buyer demand. So they're buying up homes cash to try to sell it to take advantage of those high prices. And on top of that, you ran into competition from corporations who are now jumping into the home buying market because, hey, borrowing money was so cheap now, so why not get into it? Now that the Fed has raised the interest rates, borrowing money is going to be more expensive. So now maybe that corporation will decide not to compete and try to buy homes. And maybe that couple who before weren't really serious about buying a home, they back out of the home buying market because they didn't really care. Now that the interest rates are higher, it's no longer a deal for them. So you don't have to worry about them as far as buyer competition. So for the home buyer who was actually serious about buying a home or who absolutely needs to move, this isn't necessarily a bad thing for them. Now that the buyer competition has lessened or it's going to slow down, that means now you can get into a home and actually make an offer at a decent price and not have to worry as much about multiple offer situations. In other words, you have a better chance of getting the home that you want now than you would before when everybody and their mother qualified for a loan. However, keep in mind that while the Fed did raise the interest rates, they didn't raise it to a point where it would completely slow down the buyer demand. Remember, buyer demand is still pretty high and there still aren't a lot of homes out there for sale or a lot of home inventory, period. So the market's still going to be pretty hot, just not as crazy as it was in 2021. If you want to buy a home, you're still going to have to fight for it, but it won't be nearly as crazy as it was back in 2021. So buyers should actually find some relief in that if you're really serious about buying a home. Now let's talk about how the Fed raising the interest rates affects sellers. Long story short, that crazy market where sellers get to pretty much bully buyers into any price that they want, might be coming to an end. Now sellers, you had a real good run, but eventually we knew all of this buyer competition was going to have to slow down. So there might not be as many multiple offers on your homes as before. You might have to try a little bit harder now to sell your home. The reason for that is because since the Fed is raising the interest rate, that means it's going to be more expensive for buyers to get a mortgage. That means that the buyer competition is going to be less than it was in the previous years. Less buyer competition means there aren't going to be as many buyers to buy your home, which means that the home prices aren't going to go up as fast. They're eventually going to start to plateau or maybe even drop depending on how high the interest rates rise. So actually, what we may need to look out for is to see if sellers start putting their home on the market right now to take advantage of the high prices before the interest rates go up again, which will eventually lower home prices. Another thing we might start seeing more from sellers is they might be a little bit more willing to work with buyers than they have been in the recent past. So that means they might be more willing to offer a closing cost credit or maybe to offer to make a few minor repairs, stuff like that. These were things that sellers were not willing to do during the pandemic when the buyer demand was so high because they didn't have to. The home was going to sell no matter what, so why bother putting in any extra work? Either you want the home or you don't. Now, once again, I think the buyer demand for homes is still going to stay relatively high, and home inventory is still pretty low, so sellers shouldn't struggle with selling their homes. It's just, once again, not going to be as crazy as it was in 2021. So sellers, if you want to actually sell your home, you're going to have to be a little bit nicer than you have been. Like I said before, you had a good run. Now, what about the real estate market as a whole? Is the real estate market going to crash like it did back in 08 and 09? In my opinion, I don't really think so. Actually, when you think about it, we expected this interest rate hike to happen, so it's not like this is coming out of nowhere. In my opinion, I think the market is just going to simply slow down or maybe plateau instead of prices rising so fast. The real estate market is going to go from a heavy seller's market that has been to more of a neutral market, that's all. Now, full disclosure, I have absolutely no way of predicting the future, so I can't tell you for certain what's going to happen one way or another. But I don't think we should worry just because the government raised the interest rates. So as a buyer, don't be afraid to keep looking for homes because the market is going to stay relatively stable. And as for sellers, you might want to take advantage of the high prices that we have now because they might start to plateau because of the interest rates. But even if you can, I wouldn't worry too much because once again, I don't think the market is going to crash. If you have any questions or comments for me, please feel free to reach out either through the comment section or through my website, which is BaileyAcresProperties.com. Once again, my name is Rob Bailey, realtor in the Chicagoland area with Arnie Realty Inc. Thanks a lot, guys. Have a good day.